Charlotte from HOWAS HTL Consulting Group, West and Central Africa, and I'm really happy to do the panel with you, Billy Chung, from Master Assets Investments. You are the CEO and chairman of the group, and you mostly work on mixed-use development in East Africa. You, Edmond Asamoah, you are from Ghana, you work for NAC Developments, and you are managing director of the group, so you mostly work on mixed-use development in Ghana. And Kostas Verginis from Marriott International Middle East and Africa. You're the VP Development for Lodging and Mixed Use. Well, first of all, I'd like to start with a definition of mixed use, because when we talk about mixed use development, about hotel development, we have two cases. The first one is when you develop a hotel first. The hotel is the first entry point of the development. And then you can develop as much as departments you want, like a spa, restaurants, etc. But the hotel will remain the main entry point. But then in parallel, you have new type of development where hotel is not the main entry point, is not only the main entry point, but you have other departments which become equal entry points, like retails, offices, etc. So that's why I wanted to start with you, Edmond and Billy, so you can explain to the audience what type of mixed-use development you are working on, so we are very clear about the definition of mixed-use development. Billy, you can start.
Okay. First of all, we have to understand, what is mixed use. Different people have different explanation. Actually, to many people in Africa, mixed use is new. Mixed use can be even in one building. Maybe some shops down, a second level is office, another level apartments. But where I come from, when you talk about mixed use, is big project. Big project, can be with hotel, with offices, with residences. And the advantage of mixed use is you are bringing in more for the clients to attract people to come in, so that that you have more to offer.
For example, in Kigali, your mixed-use development is what does it include? Can you?
First of all, I have a mixed-use development which is called Century Park Hotel and Residence. When you first look at the piece of land that you have, you first look at the location. Very often, we talk about location. Then I think the location define what is the main product for that area. And then you start thinking of what more you can offer. So the project that I have in Kigali is in a high-end residential area, which is actually very near from here. Driving is 3 minutes. It's just down the valley back there, which is in a very high-end residential area. This ambassador's residence, the golf course is next to it, and also next to what they call Kigali City Park. So that development, we have 16 villas, we have 10 blocks of, 12 blocks of apartments, a clubhouse. Obviously, I'm a Chinese, I have a Chinese restaurant, and also a continental restaurant, and at the end of the project, there's a Sheraton hotel as well.
Okay.
Yeah.
And what about you, Edmond, in Ghana? What is it included in your mixed-use development? So we have a very clear vision of the...
In Ghana, basically what we did, we kind of studied the market we were in, the community. So the community we're in is a heavy residential community. So what we basically wanted to do was kind of decongest the traffic situation on traveling across town for some of these services. When we started, the big factor that was a big element was there was no retail within that community. So part of the concept was to develop a shop, work, live, play concept. So our current facility has about 10,000 square meters of retail. Then it combines with another 10,000 of office services that are included in that facility. So it's about 20,000 square meters. And the way we developed it was kind of in phases. So initially, one of the elements on the mixed use was supposed to be a dense apartment. But because the driver of the office demand was so high, we ended up expanding into more retail and some office space. And the mix worked a lot better in the sense that even though we went for shop, work, live, play, it ended up being shop, work, play. And in certain situations, you might be thinking something will work, but the last extension we did with the office development, a university took half the building, which was another element to the mixed use. But it was also positive in the sense that it fed into the restaurants, into the fitness centers, into all the other facilities there. So now you have a healthy lifestyle of community for the area. So that's the current situation we have right now.
So actually what we understand is that a mixed use can be either a destination, about creating a destination, either bring something new to the market and maybe from opportunities that you didn't see before, but you progressively see coming to the market. Kostas, from an operator's, hotel operator point of view, what are the advantages of a mixed-use product in general, but mostly in Africa?
Sure, thank you. Synergies is the key word here. So you can have a hotel next to a shopping mall. You can have a hotel next to an office building. You can have a hotel next to a residential development, or any combination of the above. And the idea is that there are synergies between the two. So the most common example would be a hotel next to a shopping mall. And the back of house synergies, the accessibility of the shopping mall to the hotel guests, it's a big advantage, and we see this working very, very well across the region. Obviously, offices and hotels, again, they work well together. Hopefully, the office component will provide demand for the hotel component. On the residential side is not so obvious, other than perhaps the use of the food and beverage facilities of the hotel. So we have situations where the hotel is next to a residential complex, and the residents of the residential complex use the food and beverage facilities of the hotel. The other possible synergy is that it's relatively new for Marriott, is that of branded residences, where you have a hotel next to a residential development that is branded in the same brand as the hotel. And the residential development is sold to perhaps end users or investors. And again, this is becoming increasingly popular.
And do you think that it's adapted to all the markets in Africa, or do you have major targets in the continent?
For mixed-use development?
For mixed-use developments, yeah.
So in a traditional mixed-use development, it has to be a win-win situation. So the hotel component has to be able to stand on its own, and the synergy with the shopping mall, for example, is a bonus. It's an advantage. It's a competitive advantage. Branded residences, on the other hand, it's very, very important for the market to have sufficient demand for that product and for that brand in order to provide the developers with the initial cash flow that will help them with the funding of the entire mixed-use project.
Billy, I'd like to ask you, what are, from the developer side, what are the main steps in planning a mixed use? I think from our conversation, it's a key success factor in mixed use development. How is it different from developing a single hotel?
Well, I think it's very, very important in planning stage because, you know, once you start, you just want to go all the way. You don't want to come back, break some wall, or create another things. So understanding the market is very important. Like I said earlier, location is everything. So you must understand that what kind of product that you are giving to the customers. Well, hotel is a very good combination actually because, like for example, in Kigali, people are saying, you know, hotel is becoming, you know, oversupply, you know, because, you know, only weekdays busy, because, you know, all these conferences, you know, business people come in, and weekend there's nobody. But if you are mixing with apartments, you know, so that you bring life to the development over the weekends. In fact, my project there, they are saying now it's actually the place for family over the weekend. We have a very nice big garden. You know, we have this bouncing castle, and people just come. Actually, Saturday from lunchtime all the way up to 8 or 9 in the evening. It's busy, it's packed. You can't find a table. So I think, you know, that is important, that to have the right combination, what to do with the mixed-use project. And also phasing them is a must, because, you know, it's a mixed-use, it's a big project. You cannot build everything at the same time. So planning is very important, where to start. So.
Yeah, indeed, it brings me to my next question, Edmund. Phasing is also about financing. When it comes to financing the mixed-use development, what are the main steps and main sources? Sometimes phasing can serve the financing of the hotel, for example. Can you give us insights on this?
Yes, in our market, the lending rate is very expensive. I mean, we're talking almost 30% on the Ghana cedi, and you're talking 12% on the dollar. So it's almost like you're crucifying yourself if you go into some debt financing. So we're having to come up with logical models to cash flow some of these projects. So, for example, if we're looking at a mixed use of shop, work, live, what tends to happen is with the residential, you're selling the residence, so you're getting that cash flow up front. With the retail, what we tend to do is make sure we secure the anchor tenants and sub-anchor tenants, so it makes it easier to get debt financing from financiers, because these are the key elements. They need to be confident with that. You've already secured a certain portion. We actually go the extra step and try to get about 60 to 70% occupancy before we start. Because we've been in the business for a while, we have a lot of relationships with retailers. When it comes to hotels, it's now even becoming creative where developers are selling the suites and putting it back into the pool, again to cash flow these projects. Phasing is also extremely important because you're not going to be able to get all the funding to build the whole thing at the same time. And the scales of the project depends. I mean, you could be looking at a 4 to 5 acre site, in some cases 22 acre site. So it does make sense to phase the project and make sure it's basically succeeding and achieving the revenues you've targeted. So with our project, we had to break it up in 3 phases. And based on the phasing, we basically injected the revenue back into the project and continued that way. So we took very little debt. And in a lot of cases, especially in Ghana, a lot of us developers have to do that. It's when you don't need the money and you've got the projects and you've got the assets, then the banks are ready to finance you. And you have more investors that are interested. I think now going forward, because we have a track record basically, funding is a little easier, and getting investors on board is also easier. What we're currently doing, there's a new project we're working on, it's an oceanfront. And what we're doing with this project is a destination. What we've done with this to minimize the capital investment required, because it's about 45,000 square meters, is our core competence is commercial development. So we've actually brought in partners, a residential partner and a hotel partner that will come in the master plan. So they raise their capital and this one raises his capital. So at the end of the day, we share the risk. It's another way we're doing it. That way, I'm only raising capital just for my commercial part. And the partners, they're strong partners. They also have a good track record. So they raising their capital is a lot easier. So we diversify the risk. So that's the models that we're having to take in West Africa. Getting that big $50, $60 million is unheard of. And I think realistically, when you approach it in phases, it helps confirm your market studies were correct, and you can make minor adjustments here and there going into second phases or third phases. So that's the approach we've taken so far.
Yeah, and I think, unfortunately, this part of the world, there's no statistic for you to look at. Facing them, one of the advantages is actually to test the market.
Yeah.
Because first of all, you need to be gutsy to do a mixed-use development. So it doesn't matter how well you know the market, but still, it's a guess. I've been working in East Africa for now 17 years. So it's important to, it doesn't matter how deep your pocket is. When you look at a mixed-use development, you try to foresee what can bring you quick money for you to continue. You don't want to get stuck in the middle. So it's very important to understand the market, how you face and how you test the market on phase one, things like that.
Yeah, because from the lender's point of view, what guarantees can they have when they finance those mixed-use developments? What are the risks for them, and what guarantees can you bring to them?
Actually, for my project in Kigali, at the beginning, I had the challenges getting the bank to believe in your project. First of all, you do a nice master plan, you give them nice presentation. They say, "Really? Are you serious? Are you really bringing this kind of development in to a tiny country like Rwanda?" Well, and then we get before you go to the bank, you need company who do a business plan feasibility studies. And to be honest, the first feasibility study came out not viable. Because they're comparing some projects that, because there's no mixed use. They are comparing some ordinary, apartment projects or what, they are calculating, some restaurant just on the street, how much you can make, what. So they don't see the value of mixed use development because actually location, one, you can be in that location. Secondly, you can create a location for your project as well. And that's one of the advantage for mixed-use development. So it's very, very crucial that you plan it right. And also bring your financial into your dream, slowly, buy into it. And yeah, I got the funding.
And I think one thing you've also got to realize with phasing is it also builds the momentum for the center.
Yes.
So by the time you get to the second or third phase, there's already a traffic growing and brewing, and the popularity of the brand, etc., continues to grow. So by the time you get to second, third phase, it's already buzzing. So it really helps to build the momentum, especially with new markets like ours, where sometimes you introduce these new products. It needs time to breathe. It needs time for people to get used to the concept.
Yeah, what we have seen in branded residences that, especially in new markets, the first reaction is, what is this? And most of the developers break the market through their own personal circle of friends and investors. But when the momentum kicks in, it really snowballs to something successful. And packaging and branding helps in several ways. One of them is the pace of sales, where we've seen with successful branded residences, the selling pace of the unit, it's much higher than those of comparable products. So you have not only faster pace, but also a selling price premium, which is a good combination because it reduces the funding requirements for the developers from other sources.
So it means that the role that hotel groups can play is maybe diversifying their product, bringing, for example, branded residences on the market to play a bigger role in mixed-use development, become a leader in those mixed-use developments, because at the beginning, maybe retail offices were the biggest advantage for lenders in those projects. But what role can play hotel groups now to support this project? And what do you think? What and who do we need to support mixed-use developments?
It really depends on the market. So it needs to be consumer-driven. Most hotel brands, including Marriott, we have luxury products, upper upscale projects, select service products. In most major capital cities of Africa, you would have a decent part of the population with a disposable income and a number of expatriates with a disposable income to either buy or to rent those branded residences. So by bringing them into the mixed-use development, it really helps with the diversification or de-risking for a developer. For us, this is a very big initiative. We have already 90 operating branded residences globally with a significant pipeline. And again, places like Kigali, Nairobi, could certainly do well with some of those.
Well, for my last question, I would like to go a bit further in the mixed use influence and role, and especially in terms of urbanization. When we talk about large mixed use developments, we talk about creating destination. We sometimes talk about innovation. Edmund, what consequences for urbanization in main African cities can have the mixed use developments?
I think the mixed use is actually bringing some structure. I know in Ghana's situation, the zoning and the urbanization planning is not very effective. So what mixed use is basically doing is creating that commercial hub. It's almost what I say, igniting whatever community it goes into and pretty much develops from that standpoint. From the project we did 12 years ago, the area, which is a heavy residential area, had no commercial base. 12 years later, it's the biggest residential area in Ghana right now, and has also added other commercial aspects from schools to kindergartens, now universities. And the ignition was the mixed use, because now people wanted to be close to the retail, to the services, to the offices. So development just spurred from that standpoint. So it's now made that sector of that community better planned. People don't have to go to the other side of town to get anything. They can get everything within that region. So I think when you develop these type of lifestyle commercial centers in certain pockets, it helps with the urbanization. Because in more mature markets, they have a good urban plan as far as zoning for resis, zoning for offices, zoning for industrial. But especially in the African market, it's there on paper, but it's not implemented. So I think mixed use is offering, these type of solutions in a fluid way, I would say. So that's my input.
Billy, from your point of view, mixed-use development have a really innovation role to play, innovative role.
I totally agree with my friend here. Unfortunately, Africa is a bit still virgin, I would say. But I find it a little bit different in Kigali. Actually, they have done a very good master plan. Actually, they did invited a Singapore company from Singapore to help them to do a master plan, and they are actually implementing it. So it's like at least we have some guideline to follow. I find it very rarely in Africa that they will tell you actually this is CBD, this is residential, they even give you height limit, all this. So Kigali is pretty much organized. I also have some projects in Uganda, but Uganda is totally different kind of thing. Actually, you are the planner. You plan your own project. So it's actually you who give life to these mixed-use projects. And, yeah.
Okay. Well, any questions from the audience, please?
Hello, it's my pleasure to be here. Unfortunately, we are supplier for United Nations, and for this period, we bought a land, and the land have high value right now on the market of Sudan. And what's happened, we were not introduced to the international fund and finance, because we were under embargo, and right now the embargo is open. We don't know what's the process, we don't know what's the next step, and the potential for the market is very high. Especially we are close to the American embassy, open to the Nile directly. So I would like to have advice from the people.
So, Edmund?
I think the first step will probably be to do a market study to understand the area you're in. Once you understand what the catchment is, it will help define what type of mix you need in your mixed use. If it's next to the water within the CBD, you might want to make it a destination. But if it's more within a residential area, a little in the suburbs, then your model has to be different to meet that catchment. So usually the first step is to do a good market analysis. Once you have a good market analysis, because it includes the purchasing power of the community, you don't want to build something too luxurious and the area you're in cannot afford it. So it has to make sense to what the market demands are. Then once you have the market studies, then you can define the retail sector, how your tenant mix should be, whether you should go medium scale or high end, depending on the area. Then you also need to understand the demand for maybe office space. Is there a demand for office space? If there is, then you want to include that, but you also need to understand how much office space you need. So the market studies will tell you how much retail you need, how much office space you need, and other services that you can add if it's hotel or residence. But if you're going into a situation where there are hotels all around, it might not make sense to add a hotel. You always want to offer something that complements the area, not to compete. So that's something you want to take into consideration.
Yeah, and I think it's very important to define what is the main product. Market study can help you, but then when you are again take the full advantage of doing mixed use is once you define residence is the main product, then you can look at what more you can bring in. Like you're saying, maybe American embassy is very near. That's good and bad, The bad thing is, they might give you problem. Your building cannot be very high or very tall, security reasons. But on the other hand, they always give you business as well. Like in Rwanda, they are giving us 20, 30 rooms in a week. So it's business. So you need to look at up and down and see. Yeah.
Thank you.
We have another question.
Hi. We've been involved in a couple of mixed-use developments in Kenya, Ghana, Zambia, and I think one of the points that we find quite important from an investor's point of view is the exit strategy. So you're developing a number of asset classes in your mixed-use development, being it hotels, residential, shopping centers, and at some point you either want to exit components of this to various other investors. You want to sell off your shopping center, your hotel, or offices. And we find that legal structures in different countries affect your ability to how you can integrate these asset classes in the mixed-use developments. I just wanted to get a view from one of the panelists how your structures have worked.
I think.
That's why I said it's very, very important that you plan it right from the very beginning. You know what are you going to do in the future. You want to make quick money, then you build more to sell. Or if you are looking at more long term, and then you build more hotel rooms.
Or a combination of the two, which
exactly.
we've seen in several situations where
exactly.
Some components are designed to be sold quickly, residential, branded residences, whatever. And the remaining of the components stay back as sustainable cash flow for the future. Again, retail, hotels, different components.
Yeah, and I think most of the developers that I know to do a mixed-use development, they don't have any plan that will be sold 100% and get out. They always try to remain something.
Yeah, typically for a lot of developers that go into commercial space, it's recurring revenue, rentals. The products that you can sell are the residential. In the cases of Ghana now, they're actually selling hotel suites as well. But as developers, we tend to hold on from a long-term standpoint to a lot of these commercial projects. I think it's more your private equities that do the large-scale type projects. They always, naturally with private equities, they have an exit plan. They typically, I know 1 or 2 projects have been done like that in Ghana, where after 5 years, they sold the whole development to another equity fund, and the new equity fund has expanded on the existing one and has grown. It's an easy entry for big players to come in and even maybe acquire something like our development, in the sense that they already have a footprint, they already have revenue generating, so it's a way to just get into that market. But typically, with developers like ours, we're a family development company, we tend to hold on long term and just kind of keep growing from that standpoint.
Thank you very much, and especially thank you.
Thank you.
Thank you.
Thank you.
Please join me in thanking Charlotte and her panel.
Thank you.